welcome to this edition of the Mutual Fund Guide. I'm Vandita Shivle. Joining me on the show is Ankur Maheshwari, CEO at Equirus Wealth Management. Welcome to the show, Ankur, and thank you so much for joining us today.
Thank you.
So, Ankur, before we go ahead with our question and answer round, I just wanted to bring out a thing here that we observe that a lot of investors, they ignore scheme information document part before investing in a scheme.
Right.
And if we really dig deeper into that, this scheme information document, it really gives them, it could give them an overview of the liquidity risks, various other risk factors, what is the minimum, what is the investment strategy. So,
right.
If you, would like to tell more about this particular document.
Surely. So I think before making any investment, it is very important for an investor to understand the finer aspects of a scheme.
Right.
And in that context, SKIM and SID are probably the two most important documents which can give complete information about that scheme.
Absolutely.
It could be covering various aspects, starting from something like a minimum investment amount to the strategy of the fund and things like that.
Right.
So I would think that it is very, very important for an investor to spend some time, get a better understanding of the scheme, and then take a call basis the information that he gathers from these documents.
Absolutely. So it's like a profile of the scheme, right?
Yes, absolutely. So
all right.
Yeah.
So that's the view coming in. Please, viewers, do go through scheme information document before you invest in any scheme. With that, we move on to our first caller, Ijaz Tehani, who's online from Mumbai. Hello, Ijaz. What's your question?
Hey, hi. Good afternoon.
Good afternoon.
Before I proceed with the query, I would like to thank everyone for giving me the opportunity to speak with the experts.
Please go ahead.
And I am 33 years old and I can invest 15,000 in 4 schemes which I have shortlisted.
All right.
So in multi-cap, I have shortlisted the Miri Asset India Opportunities Fund. Mid-cap is L&T Mid-cap. Small cap is HDFC Small Cap.
All right.
And for large and mid-cap, there is a new Access Growth Opportunities Fund scheme which invest in international markets as well. Okay, so my query is, what is the fund which I have shortlisted? What are the views? And in the 15,000, how should I split the amount in these 4 schemes?
All right. So his goal is basically wealth creation, retirement, and his child's education and marriage. So what do you think about the shortlisted portfolio?
So I think the schemes that he has selected are all good schemes.
Right.
They have a fairly decent track record in terms of a long horizon of performance, consistently beating benchmark, and managed by good fund managers. So I would think that in the respective categories, the performance of these funds are good. The only thing here being that the Access Fund is a relatively new fund, so we don't have a long-term track record for that fund.
All right.
So we should be just on a lookout of how that performs, and then just keep an eye on that fund.
All right.
As far as his goals are concerned, I think it is important that we tag every scheme to a goal. So for example, he has selected 4 schemes.
Right.
So one scheme can be tagged for wealth creation, one for child education, one for child marriage, and so on and so forth. What this will do is that for every category of goal that he has selected, it will help him track how the corpus is building from each particular investment. So I think that is what one should do, tag every fund investment that he's doing to a specific goal.
Right. And he can increase the time horizon because he is investing in mid-cap and small-cap funds. So I think the longer horizon, the better returns he would be getting.
Absolutely. And given that he is 33 years old right now, he has fairly long time horizon with him. So he's made a start at the right time. And only, I think, as time progresses, he can further increase the SIP amount which can go into it.
And a lot of investors and a lot of advisors, they have, come up and they have actually told that these mid-cap funds, when they have invested for more than 8 years, like 10 years, they have given phenomenal results.
Absolutely. So mid-caps and small-caps go through their own shares of ups and downs. Like we saw, year 2017 was a fantastic year for mid-caps, small-caps. 2018, on the contrary, was a very different year.
Absolutely.
So one has to just live through that volatility. But like you rightly said, over long term, the ability to create wealth from this segment of the market is much higher. So one should be just patient and be invested in that.
Absolutely. So all the best with your investment, Ijaz. We have our next email. That's from Satish, who's from Ahmedabad. He's 62 years old and would like to invest 50,000 rupees every month for next 6 to 8 years. He asks, will he earn 2.5 times of his investment at the end of this period or before? He would also like to withdraw the gains earned every month regularly after 6 to 7 years. He is clearly looking for fund recommendations here.
Sure. So I think at that age, I think the first step, and for that matter for every investor, I think the starting point has to be asset allocation.
Absolutely.
So given his age, I think it will be a prudent recommendation to say assume a 60-40 kind of a equity to debt asset allocation. For the amount that he's looking at, 50,000, it could be split between equity funds and debt funds.
Right.
So again, given that he is a 62-year-old, I would think that sticking to large caps would be a better choice than going towards more of mid cap and small
Right,
caps.
absolutely.
So a combination of large caps and multi cap funds would be a good combination to have in the portfolio. At the same time, on the debt side, I would think not taking too much of credit risk and as well as the interest rate risk is better, because the direction of interest rates normally is difficult to predict, and funds like low duration or short debt funds are generally more stable and steady and have less immunity to market movement.
Absolutely.
So in that context, I think the two schemes that we have sort of have a good track record, like IDFC short term, which has a very high credit quality profile, and a Kotak low duration, which is again running a low modified duration, are good schemes to hold. On the equity side, again, that can be split into a large cap fund like say Axis Blue Chip, good track record, very steady performance, and other funds which are more on the multi-cap side, and a combination of large and mid-cap, which is the new category which SEBI has created recently. So specific to his question on 2.5 times, that's a very difficult statement to make, because markets are unpredictable. But what I can say is that over long term, markets have shown that equity as an asset class has given around 15% over long term, and debt as an asset class has given 7 to 8%. So that's a reasonable statement to make, I would think.
Absolutely. So balanced asset allocation, that's the advice coming in for you. We have our next caller, Ganesh, who's online from Mumbai. Good afternoon, Ganesh. What's your question?
Good afternoon. Ma'am, I watch your program regularly, and last week's program on debt mutual fund was very informative and useful.
Absolutely. Thank you so much.
Ma'am, I'm 55 years old and just retired, and I'm investing in shares and mutual funds since last 10 years. My investment in mutual fund is about 30 lakhs, shares 42 lakhs, and bank deposit 22 lakhs. I want to know whether I want to rebalance my mutual funds considering change in my status. My investment in mutual funds are like this: SBI Blue Chip 5 lakhs, HDFC Top 100 1.5 lakhs, HDFC Mid Cap 2 lakhs, Kotak Standard Multi Cap 8 lakhs, L&T India Value 1 lakh, HDFC Hybrid 4.5 lakhs, ICICI Balance Advantage 3 lakhs, SBI Medium Duration 5 lakhs. I am going to receive a benefit of 30 lakhs in 10 days. I want to invest 25 lakhs in mutual funds. I want your advice in this respect. My financial goals: I require 25 lakhs at today's value after 3 years for my daughter's marriage, and every year I'll require 4 to 5 lakhs for family vacation. I have no loans and I stay in my own house, and I'm going to receive pension of 32,000, which is sufficient for day-to-day expenses. Please advise, ma'am.
Absolutely. So what's the recommendation from our MF expert? Let's see.
Yeah, so Mr. Ganesh has clearly laid out his financials, and also I think the good thing is that he's very clear in terms of his goals. So he's laid out the requirement after 3 years for his daughter's marriage and his idea of having a regular vacation. So I think the most important goal therefore is the plan that he needs to create for his daughter's marriage 3 years down the line, for which he has indicated he needs 25 lakhs. So I think out of the retirement corpus that he's getting as of now, if you look at 3 years down the line, if you park say 20 lakhs approximately in a good FMP, one is sort of assured about sort of a 25 or number close to that in 3 years from now. So I think one cannot take a risk with a event like marriage. So one needs to have a steady and a stable sort of plan for that. So I think the corpus that he's getting, one part of it could go there. Also, as I was listening to the number of schemes that he has, one while diversification is good, but at the same time one has to take a look at whether he's getting over diversified. Also, given his age and that he's retired now, some bit of debt allocation could be considered to be increased in the portfolio, because there's a lot of equity schemes and hybrid schemes which again have a combination of equity and debt.
Maybe some short-term debt
Some short-term debt fund.
Or dynamic bond schemes.
Correct. Also, the funds that he has in the portfolio, I think, are mostly good funds, have a good track record again.
Right.
The only thing here being that he has a medium-term duration fund, which would be in the 3 to 4 year duration kind of portfolio. So we would always recommend a safer bet on the debt side, which is again the low duration or the short-term debt. So that is an option.
So would you like to name some of the debt funds?
So again, like we just discussed, maybe IDFC short-term or say a Kotak low duration, I think are fairly good choices, both from a performance and a credit quality point of view.
Right. I really like this fund, what he has in his portfolio, HDFC Top 100.
Right.
Prashant Jain has really done a very good work on this particular fund, I would say.
Absolutely.
On manager. And it has given very consistent returns.
Yes, absolutely.
Right.
I think it's one of the oldest schemes in the
Absolutely.
country, one of the largest schemes in the country,
Yes.
fantastic track record.
Absolutely.
The kind of credibility it has built over the years is phenomenal. So clearly it is a choice in most of the
and the kind of concentrated bets it has, it's just amazing strategy, I would say.
I absolutely agree. I think it's a fairly good choice to have in every portfolio. Right.
Yes, so that's the advice coming in for you, Ganesh. You have to also balance your portfolio, add some short-term debt funds in your portfolio. We have our email, which is from Ravinder Singh from Ghaziabad. He is 32 years old and currently investing through SIP of 5,000 rupees in L&T Midcap, Mirae Asset India Equity, Kotak Standard Multicap, SBI Small Cap and Axis Blue Chip Fund. He has a time horizon of 20 years, which is pretty good. He's asking, how is his portfolio?
So great. I think he is starting again at a very good time.
Right.
Early start is always helpful because of the power of compounding that we have always seen in the wealth business. The earlier you start, the more you benefit, right? So when he's starting at 33 and he's saying that I have a 20-year horizon, I think he's having a very, very clear view and a good plan in mind.
Yes.
As far as the schemes are concerned, I think most of the schemes that he holds across different categories, again, good schemes, Axis Blue Chip, Mirae, again, a fantastic track record of beating benchmark. Year after year, L&T Midcap, again, one of the best in the midcap categories that we have seen. So I think most of the funds are, I think
they are mostly in the gold and silver category, basically.
Absolutely.
And if you look, he has diversified it so well. Like you have a mid-cap, you have a small cap, he has a multi-cap.
Absolutely. So he's well spread across the different market cap segments as well. The only thing is that SBI Small Cap is a little volatile fund, especially in the small cap category. One has to be a little more prudent. He could look at, say, HDFC Small Cap, which I think has a relatively more stable track record. That could be the only change I would recommend. Other schemes, I think, are fairly good.
So instead of SBI Small Cap, he can have an HDFC Small Cap.
I would think so, yeah.
All right. So that's the advice for you, Ravinder. You can replace SBI Small Cap with HDFC Small Cap Fund. All right, we have our caller who's online, KNC Murthy. He's from Bengaluru. Hello, sir. What's your question?
Hello. Hello, good afternoon.
Yeah, very good afternoon, Mr. Murthy. Please go ahead.
Ma'am, I am a 63 years old retired person.
Right.
I have invested around 10 to 15 lakhs in equity fund. I am a very long investor in equity funds. But I lost too much money. And now I have a deposits in REC and NHEI. It is going to mature next month or February month. I want to invest in mutual funds or which is create lump sum. So can I invest in lump sum or mutual? How can I invest in? I'm the first time investor in mutual funds. Can you give me recommendations, please?
Of course, Mr. Murthy. What do you say, What do you have to say, Ankur?
Sure. Again, so in this case, we have a senior citizen who is 63 years old, first-time investor.
Correct.
Wanting to create a portfolio for the first time. He, like you mentioned, he has REC and NHI bonds which are maturing next year. So I think, like we discussed, the first step has to be asset allocation. I think that's the starting principle for creating any portfolio. So again, I would believe that a 60-40 kind of a allocation at his age would be good. Given that he also mentioned that he has experience in markets overall, so I think that helps in some sense. Second thing I think is that it has to be, once we decide the asset allocation, then we would recommend that on the equity side specifically, he takes a staggered approach towards investment. Investing lump sum is good, but definitely keeping in mind the volatility which we have seen and the foreseeable volatility which could continue for 6 months or so. We think that gradually moving from liquid to equity, which is a systematic transfer plan approach, I think works best for investors because it evens out all your buying points.
Correct.
So for the equity funds, STP is recommended as a safer approach. So instead of lump sum, and on fixed income side, again, given the interest rate, we saw 10-year touching 825, then again coming back to like 750, 760.
Maybe a staggered approach would also be another suggestion.
Absolutely. So the schemes, again, once we decide the asset allocation, then we decide the schemes again across market cap segments. So large cap, then multi cap.
Any capital protection oriented schemes for him?
Yeah, definitely that could be a good option. But the only thing to keep into mind will be that they typically come with a lock-in period of 3 years or 5 years. So that is the only thing one has to keep in mind. Otherwise, that could also be a good option.
All right. So we really hope, Mr. Murthy, that you got your answers and all the best with your investments. Thank you so much, Ankur, for joining us today. Viewers, that's how you save, invest and prosper. That's all for this edition of the MF Guide. Stay tuned on the other side for more news and updates.